what are some of the lessons that you learned switching from manual execution to automated execution?
It was more of an entertainment thing for me in the beginning and just testing myself what I can do, because I had experience running accounts to 10x before, but it was like always with small sums.
I actually almost quit crypto in 2019 because I was a little bit tired of BitMEX, because you had the inverse contracts. Like, for the people that don't know, you deposit Bitcoin and you use that as collateral to trade Bitcoin.
First I started trading equities, and my whole base where I learned to trade was from a hedge fund manager, from active long short position management. So I moved from there to crypto once there was possibility to short. It was in 2018. So I moved to crypto for shorting, first of all. And I continued employing the same strategies I learned for equity markets in crypto.
Welcome to the podcast, CJ. You are not that well known of a figure, but back in the day you had quite a career run, because you started a challenge on FTX. You started with, I think, 5,000 and you ran it up to a couple million in 3-4 months or something like that on the public leaderboard. Is it right?
Yeah. Thanks for having me. First of all, I think it was in the end of 2020 year. I started in November. So that was the moment when we broke all-time high with Bitcoin, somewhere around there. And I just saw a lot of opportunities, and I felt that trading is quite easy at that point in time. So I basically dedicated a small part of the overall finances to degen and try how high can I go with scalping. And it was kind of a combination of the fundamental trades and scalps and long short management.
Okay, and that was, do you remember the amount? Because I know it was a few thousand and a couple million, but the numbers I don't really remember.
Yeah, there's actually a video on YouTube. It was one deposit of $5,000. And in the end, I ran it the peak was nearly 5 million, almost 1000x. And then it fell. Then it fell back to about 1.2 millions from there.
Proper degen behavior.
Yeah, because I withdrew along the way. When we started falling, I started withdrawing, and basically the account was liquidated, but in the process I withdrew 1.2. So that was proper degening.
Yeah, I can see. So instead of closing the position, you were just okay, I'm going to withdraw the collateral and hope that I don't get liquidated, I'm guessing.
Yeah, well, I was the strategy that they used is the strategy that hedge funds employ usually, where you have some shorts and you have some longs. And last thing you want to happen is that it goes both sides goes against you. And when both sides goes against you, longs and shorts, you essentially can't really, you should rely on the fact that it will reverse, because your thesis is still intact. Yeah.
And because you said okay, I allocated a small portion of our finances towards this degen account, and also your name is, well, I called you CJ, but your Twitter handle is CJ Lower Score Fund. So I'm guessing this was a sort of promotion to because you had a hedge fund and you wanted to promote it, or what was actually the end goal with that challenge?
Well, the end goal with the challenge, there wasn't a promotion, but I basically let people connect through API to my account. So we had people who ran $2,000 to 200, 400,000.
So you were doing a sort of prop trading thing where people just get API access, they can trade, and then you do a profit sharing thing. And that was and this was the promotional thing that you wanted to do for that, or? It
was more of an entertainment thing for me in the beginning, and just testing myself what I can do, because I had experience running accounts to 10x before, but it was always with small sums. And here I just committed to it and played it much longer than I usually do. So it was 4 months straight. Okay. Before that, it was always a week or a couple of days.
Because you were aiming for a 10x and then withdrawing it, I'm guessing.
Yeah, exactly.
And you were saying that you did a combination of longing and shorting. So I'm guessing that you were doing pair trades, maybe, because I know that a lot of hedge funds, including myself, I trade often against the BTC pair, just to remove, to capture the beta a little bit better. Was that the strategy that you were running, or was it a little bit different?
Well, I moved, first I started trading equities, and I was, my whole base where I learned to trade was from a hedge fund manager, from active long short position management. So I moved from there to crypto once there was possibility to short. It was in 2018. So I moved to crypto for shorting, first of all. And I continued employing the same strategies I learned for equity markets in crypto, essentially.
Okay, and like these types of strategies, what are we talking about? Because you mentioned a little bit about fundamentals, and in 2020 there was a lot of DeFi plays that you could do. But since you were coming from equities, I'm guessing that you were doing a lot of order flow trading.
No, it was mostly I was creating fundamental thesis for pair trades. Let's say I long Solana and short XRP or LTC or something, and based of that, then I create like technical game plan for it, and I proceed with scalping the trend for both, for longs and for shorts. So on shorts I lose money, I get stopped out a lot, and on longs I essentially win more than I lose on shorts.
And limiting the risk. But was this like an automated process, or did you do it all manually?
I started completely manually, and then we slowly started automating it. So by the end of the challenge, I had automated execution, but I never had automated like trade selection. So it was, let's say, because the account grew a lot, so I started having trouble with liquidity, right? Like entering and exiting positions with 5K is something different than with like 2 or 3 millions. So I had to create tools to automate the entry exit process.
And what are did you code those yourself, or did you have a team behind that?
I built team as I was doing it. So I started with current CTO. We started like as 2 guys just doing this. Then we hired one developer, and by the end of challenge, we were already a team of 5.
What are some of the lessons that you learned from switching from manual execution to automated execution?
Well, for me, it was first time that I even experienced what does it mean that there is not enough liquidity, or that there's any trouble with liquidity. So like moving from equities trading, not a large account, moving to crypto trading, still like quite small account, to trading like multiple millions as a scalp on low liquidity pairs. It was like a very sharp experience. And maybe it was one of the reasons why I basically ran account down, because I was having trouble exiting positions essentially.
And like you were trading back in the day on FTX, and you mentioned earlier that you started in crypto in 2018 because you could short. I'm guessing that you were trading on BitMEX then?
I started on BitMEX, but then there was Huobi and Bitfinex. There was these two exchanges were the most dominant at the time when I was trading.
Yeah, I think that BitMEX was a little bit more dominant because you had like the inverse pairs and there was no KYC, but then because it was an inverse pair, it wasn't really ideal.
My first experience was on BitMEX, and like I was fascinated by what Arthur invented in terms of perpetual swaps, like for crypto, and I was really fascinated how it worked. But I had to find pair trades, and for that BitMEX wasn't suitable. So it was very exciting for me in 2019 and 2020 when there was FTX, which had essentially same mechanics as BitMEX, but they had way more pairs. And that was attractive for me to start employing these strategies and start scalping on lower time frames.
Yeah, I was kind of in the same position as you, because I actually almost quit crypto in 2019 because I was a little bit tired of BitMEX, because you had the inverse contracts. Like for the people that don't know, you deposit Bitcoin and you use that as collateral to trade Bitcoin. But the thing is, if you deposit Bitcoin and you open a Bitcoin long, you're actually long 2 times, and that isn't really ideal. Plus there were like some other quirks with BitMEX, like I remember the 8-hour withdrawal times, if you remember those.
Yeah, sure.
That was a good time in 2019 when we had that March crash, and there was like an arbitrage of like 25% between the index price and the contract price back in the day. Like that really screwed over a lot of people. But then, okay, you made the switch to FTX. Like Bitfinex and Huobi, I know, weren't like that great at the time. Like the liquidity was dying a bit down, and FTX came up, and they had clean user interface, good API design. The accounting side was not that good on their end, but we learned that later. When you started this challenge like with a small account, and you grew quite a lot. After the challenge, like what did you do with your life?
Oh well, I had a lot of things to do because suddenly I had a team. I had some VC investments already. I mean, the challenge account was one account, but then I had another account which was growing as well, which was like larger. And with this account, I basically diversified at the right time. So I made some VC investments. I hired a couple more people, and we gradually build up towards like building a team, building a trading school, and building everything we run right now.
That the VC investments, did they go well or not?
They did go well, but they did go well. They did go well because I was very aggressively selling them. So, like, otherwise, if I kept them, obviously it would run to.
Do you still remember the names of the projects if you want to talk about them?
Well, it was Radium, actually.
Radium? Oh,
Yeah,
wow.
it was Radium, and then it was couple other projects from the Solana ecosystem, these early projects, but the Radium was the only one that is successful until now. Like there was Serum, if you remember.
Sadly enough, yeah.
Yeah, all these things. So I was basically trading only on FTX, and I was investing projects that were related to it in any way. So,
yeah. I remember like the whole saga. They had Serum, they had Oxygen, which was
that was
you had like
scam.
you had Mercurial or something that then became
Maps. There was
Maps.
yeah.
Maps.me. I remember that some of the VCs like CMS Ventures were like writing threads all day, like, yeah, Maps is going to be, like a game changer. I think they bought like that app also for like 100 million or something.
That one. I skipped Maps. I skipped Oxygen, but yeah, I had a couple that Bonfida actually. That's one that that one didn't go well. But yeah, so there was Bonfida, there was Radium, there was Serum.
Yeah, Bonfida, I remember that they were originally starting, I think, as this decentralized exchange, and then later on they switched to Solana domain names, if I'm not wrong.
Yeah, they made multiple switches.
They made multiple switches.
Most of originated Solana projects, they either stopped doing anything or they made several switches.
Yeah, okay. Well, it's better that you make switches than just quit. But I mean, back in the day in the Solana times, it was, really, really different. Like I only did one Solana investment, and let's just say it was my first investment. It was banks.gg. Didn't sell a single token yet, but I'm down like 98%. Still better than my FTX claim. So, that's good. But like you mentioned like you made some VC investments and you were building up your team, and you established your team as well. When you started this, trading in crypto, did you start immediately with your CTO, or did that happen later on?
It happened later. I moved to crypto from Equities in 2018, and I moved to short basically, and I was doing it alone. I didn't have any analysts or anybody. I was just trading on my own. Like I was poker player mostly at that time, and I fully transitioned to trading when FTX started. Working basically. Before that, I just wasn't convinced that the trading venues are attractive enough to give it like a full focus.
Yeah, no, I totally get that. I mean, I was in the same boat. But then you went from solo, then you got your CTO. Like, what was it like to go from a solo trader to actually like building a proper trading firm?
I think it was financially damaging because I think like if you have a huge success with trading, you shouldn't go into business. It will take a lot of time, a lot of attention. And with trading, what I believe is that like incremental 10% of attention gives you much better results than 10%. So like if you subtract the 10 or 20% of your attention to something else, you actually don't lose 10 or 20%, you lose much more.
Yeah,
efficiency is like just lower, and the hit rate is lower within the trades and all this. So for me, I think it was financially damaging, but it was something that that is more suitable for life probably, to run a project and run a fund, run a business.
No, I definitely get that. Like, I'm, especially back in the day, I know that everyone was like, okay, I'm having 4 hours of sleep a day. Like, I have to be online every hour of the day because, there were new projects were launching. The volatility then was great. A lot of, aggressive flow from retail was incoming. But then, okay, you got your CTO and you got your entire team, but like, I mean, like, how did your way of trading change now that you had a team? Because, certain processes got automated. I'm sure that now that you had a data scientist and some programmers, you had way more data to play on. Did that, give you a lot more insight, or was it limited?
Yeah, so essentially I moved from this 2018 when I was only picking long short pair trades. Now we moved to just algorithmic trading. So we do completely different thing now, right? We don't bet on direction anymore. We started betting only on direction, when I started trading, and then when we started working with CTO, we first automated the execution, then we automated a lot of other processes, and then we figured that we can actually, with the current team, that we can go full algo.
And when you say full algo trading, you mentioned directional trading, you mean delta neutral, I'm assuming?
Yes.
Do you also do market neutral at all?
The thing we do is we do delta neutral, and we estimate the profits that we will generate by it, and then we risk the profits with the directional trading.
Yeah.
So we are maximizing the return with having a stop loss at 0.
Yeah, no, I get it. And the delta neutral strategies that you are running, is that high frequency? Is that more mid frequency? For example, if you're going to do delta neutral trading, you can do it via market making, but that's getting highly competitive, and it's really fast. But if you're a bit slower, you can still do cash and carry strategies. Is that more of your thing, or?
Well, we do all kinds of strategies, but usually there is for each year or for each market regime, there is one dominant direction that we can take with taking into consideration the size of the capital. So, for example, at one point it was just extracting basis trades with high funding pairs. Yeah, that was the most profitable. Right now, that's quite a good strategy still, but there was much higher returns with playing with options, right? And option strategies. Then, for example, strategies like staked and hedged dupe. Was very good during the meme coin mania. So there's always for each regime there's a dominant strategy for each capital size.
And because you mainly were trading on centralized exchanges, how does that currently look like? The split between centralized exchanges and decentralized exchanges?
Well, after FTX, where I was concentrated basically for maybe 80% of the overall stack, I diversified quite a lot. So I would say right now decentralized exchanges are maybe 70% of the overall stack, and 30% on the CEXs are mostly used to short or to hedge.
Okay, I see. And is that then still the cash and carry strategies, or do you also do things like taking advantage of incentives, like a points program?
Now it's mostly cash and carry. Before that, there was 2022 and 2023 were great years to farm airdrops or do points and all these kind of stuff. But right now, I don't think it's dominant. Maybe it will come back again. But currently, cash and carry is more suitable for our capital.
Why do you think that incentives and point programs are not worth farming at the moment?
Well, they're worth farming for smaller capital. If you're large enough, then you basically need a lot of different incentive programs to be properly diversified with the capital, and at the same time to have a good chance of hitting some kind of jackpot with that.
I mean, I think that it's still possible. Now it's a little bit dry. I mean, Extended launched their points program this Monday, but besides that, I think there's still a lot of potential in automated airdrop farming. For a while, I think during last year in April, what I would be doing a lot is automated airdrop farming on chains like ZK Sync. So I would go to that specific chain, I would go look at multiple applications, I would automate, some interactions with it, and I would build these sort of profiles. So what I would do is it would, for example, be an American agent. I would give them a working schedule, so a 9 to 5, for example. I would give them a residential proxy, and then it would do the actions within, the hours that they were free to look legit, and then try to hit as many, potential protocols as possible, and then trying to, try and figure out what kind of incentives they were running. So providing liquidity, for example, or, just swap volume, the number of transactions, getting as many unique days and weeks and all of that stuff. Is that something you did at all, or you totally skipped?
Well, we did it, but we did it in the 2023 with different ecosystems. Like we did not do zk-sync. We did. I'm to be completely frank. I wasn't running this department, so it was like more CTO running all these things. So he would have a better overview of what exactly did we do with zk-sync, for example. But in general, the portion that we dedicated for this kind of strategies decreased with percentage over time. Yeah. So also another reason is like as you grow capital and as you improve your strategies, these things like getting points or farming something, these things are not really reusable as well as let's say a strategy that just generates money on funding if you improve it. So it's like you can build a system for it, but the system will be not very useful for something else in a year or in 2 years.
Yeah, it's like a one-time use thing. I mean, you can use some of the infra, but it's a lot of work, to implement it for a new chain. I did it in the beginning for zk-sync, and then I moved it over to Scroll, but then they were very focused on providing liquidity and other stuff where they give points. But luckily enough, I didn't farm Scroll too hard at the end because, well, it didn't really go too well with the airdrop. I don't know if you saw that. Now, when you're running these cash and carry strategies, funding on decentralized exchanges are often quite higher, but there's also the risk, of course, because these platforms are a little bit more new. There's a smaller TVL. How do you approach the risk of deploying capital on a new exchange?
You mean centralized or decentralized?
Decentralized. Well, actually both, but because Extended's decentralized. Let's start with that.
Yeah, well, essentially we don't hold more than 20% of the capital within any one counterparty risk venue. So after FTX, we basically just have this strict rule that we never hold like more than 20% within anybody. And if we hold it with any counterparty, we estimate the risk, which is like, let's say 0.1 to 4%. Like either 0.1% or 4%, somewhere in between, and we just account this risk into our expectations of it's per year, right? Into our expectations of the strategy yield. So if the risk is too high and it's damaging the profitability, we just switch venues.
Okay, and you said okay, I'm not going to keep more than 20% of our equity in one counterparty. Do you? I'm guessing you're talking about like a specific DApp, but not, for example, a chain.
Yeah. It's more DApp oriented.
Do you are there any specific rules on like a specific ecosystem? Like I don't want to have more than X percentage capital on Ethereum, for example, or is that not something that you really talk about?
No, we did not account for that, but it's quite natural for us since in general, with the smaller ecosystems, we don't want to hold that much capital. Like if there's super high yield, let's say on Solana, we would probably risk like moving over maybe 50% into different protocols there. But it would rarely happen that it's the most profitable thing we can do. So I did not really account for that because naturally it never happened that I would have like more than 30-40% within one ecosystem.
Okay, that's good to hear. And now, how do you approach security when it comes to centralized exchanges? Like, how do you assess the risk?
The risk of
centralized exchanges
CEXs going bust. Yeah. Well, we have an alert system in terms of like unusual flows on the centralized exchanges and in terms of unusual flows on the centralized exchange wallets, right? And also we have alerts from the people like Zach or anybody who's basically pointing out these risks.
Okay, that's good. And I have to go back to FTX because we both got pretty wrecked on that. How was when FTX was happening on that day? What went through you because in the beginning it was a little bit weird because SBF was saying that everything was fine. You had a lot of people being supportive. When you were going through all of that and your withdrawal was in queue, do you remember what was going through your mind and what you were thinking at all?
Yeah, well, I was quite busy arbing the price differences between FTX and other venues because like for example Solana went to $6 on other venues, while on FTX it was like at 9 or 10. So I was quite busy just arbing and making sure that the losses are not too large, because anyways it was maybe like 70% of my whole stack that stayed on FTX in the end. So I was just making sure to get at least something back by doing these trades. And I wasn't even like closely watching how the things develop, because I just understood I have no power to influence it in any way. So I just accepted that there's a chance that we will not get this money back ever. And I was trying my best to place the good ARBs and good trades.
But if you're going to do those ARB between FTX and then, you know, another venue like Binance, like, you know, because you're hedging on one exchange, like, you know, if you're on the bad side on Binance, for example, like, how did you make money from that? Because you didn't really know which direction it was going to go.
Oh yeah, sure. Well, there was a percentage probability that you will not get FTX money back, but obviously you place trades in a way that you prioritize keeping profit on other venues, not on FTX. You just place a percentage on the FTX money. You discount it by this, and then you look for trades. But usually it's not only ARBs. It's also like predicting what will happen, because it's like super volatility period. And there were really attractive trades during that.
Do you remember any of those trades?
Mostly it was Solana. It was Solana and FTT. Like these two tokens, they just were really wild on all exchanges. And you could pick up like 50% moves in a day, couple times. During the most volatile days.
And what was like a signal for you to, for example, long Solana during these moves? Like, was it just the extreme volatility that it just like made a trend switch, or was there something else?
Well, first of all, it was like fundamental, because I did not expect Solana to go like to 300 in this cycle, but I certainly knew that it will not die at $6, and there will be like a lot of volatility even if it was to die. So it was quite intuitive fundamental trades there. People were just panicking. They were making wrong moves. Everybody was on the edge, basically. There was a lot of liquidations. So you just try to pick up
So you were like
people
quoting,
who are wrongly positioned.
Yeah, you were just like quoting very wide and hoping you were getting filled, I guess.
Yeah. But also, like as I said, the volatility was so extreme that you could just pick up a 50% move in a day. Yeah.
And then, you know, after FTX happened, you know, you discovered that, you know, you're not going to get your money back. You know, you have 20% or 30% of your stack left. What was your strategy to run it back up?
Well, I during the whole collapse, I think 70% was on FTX, and out of the rest of 30%, there was still a lot of money locked up for various reasons.
Because of VC investments, or?
Yeah, either because of VC investments or because it was in strategies and we didn't want to discontinue them. There was like various reasons why I couldn't just take the whole stack and play with it. But I used let's say liquid maybe 15% to run it back to 30 quite quickly, so to double up the stack right after the collapse with all this volatility. And then it was a slow grind, like markets were recovering, so I was just slowly grinding back.
And you were doing the same strategies, like doing short-term scalps and all of that stuff, or?
In general, I started trading less after FTX, because before
Volatility
that,
died.
before that, it's first of all volatility, and second of all, it was like before that I had good momentum, and I was just trying to run it as high as I could, disregarding life at all. And after FTX, I was like, well, I actually have quite a bit of money. Maybe I should live a little. So I started trading less in general. I focused more on building, and we onboarded a new team. And basically, we were doing a lot of other stuff as well during the boring times.
Other stuff you mean like outside of crypto?
Outside of crypto and inside crypto from the perspective of building projects rather than trading.
Okay, and what are these? You know, what are some of the projects that you've been building?
Well, we onboarded the Zano team, which is most innovative privacy blockchain right now, and we onboarded them and started working with them towards creating an interoperability network that would allow people to bridge between like Bitcoin privacy chains and smart contract platforms. So essentially just providing yield and privacy to anybody who holds Bitcoin.
And what are the legal implications of that? Because, right now the EU recently said like, oh, we want to ban Monero and other privacy coins by 2027. I mean, they tried to do that in 2020 or 19 or 20, because I remember that the European Union like released a document 300 pages long, lots of bullshit, and then at the end they just said we cannot ban them, so what we're going to try to do is delist them from every centralized exchange so that you cannot buy and sell them. And that worked for a little bit. I mean, they removed spot pairs on Binance and other centralized exchanges that had like a pretty good reputation per state, but there were a lot of exchanges that just didn't care. And I'm imagining that Europe, for example, wouldn't be happy that you're building a direct bridge where you can send Bitcoin to your platform and get Monero back. So did you already, did you figure out like a legal loophole or?
No. I don't think it's a loophole. The idea is that first of all, the project is interoperability and privacy is composable. So essentially, what we do is we can integrate any privacy network that is legal or that has no problems with the regulator. So as long as there are privacy networks which have no problem with regulators and they are willing to work with us in terms of like the technologies, we can implement them or we can like switch them off. So essentially what we do, we are not a privacy oriented, we just add composable privacy to the interoperability project. And I think this direction is like the most wise approach to privacy, because it's even though there is an attack vector to it, the attack vector is against the whole privacy sector. It's not towards the specific project. So if they come to us, if you're like, well, okay, well, you have problem with this privacy chain, we can delist it. We can list something else.
I see. And is this still the project that you're working on right now?
Yeah, that's the Bridgeless. That's the main project right now.
Maybe you should say the name.
Yeah. It's Bridgeless. It's a
the name is literally Bridgeless.
Yeah.
Oh, okay. Yeah. I thought you were just saying like, oh, it's Bridgeless, like there is no bridge or something.
It's literally bridgeless.com.
Yeah. Okay. Okay. Sorry, I didn't realize it, because I remember the times that that FTX really got wrecked. Like I had all my money on there, like 99.98%. So
okay. You had it even harder.
Yeah, there was a lot of whiskey involved for a month.
For me, quite a bit as well.
For me, I didn't have much money, so it was a really cheap whiskey, which was not good. Now I can at least afford the good stuff. But yeah, anyways, like I remember that I went into straight depression when FTX happened. Like I thought my life was over, because I don't have a degree or anything. I had nothing to go back to. But one of my coping mechanisms was I would go on Twitter and I would be, looking at like the big names like High Stakes Capital, who was depositing millions more too long. I was looking at your account, for example. There were some other people, and I remember you like just tweeting at a certain point like, I don't really care much about trading anymore, and then you posted like a video of you skydiving, that was your new passion for a while.
Yeah, that was maybe the moment where I was the most detached from trading, like during the whole career, because essentially what happened, there was a Bitcoin ETF, and I did not believe that it will get approved, and I was very skeptical about it, because if it wasn't approved at the time, I think crypto would be nearly over after that.
You really think so?
Yeah, I think it would be over for a couple of years for sure, because imagine all these flows from the ETF and the BlackRock, and like all that would be if you subtract it from the chart. Yeah, there's not much left.
Yeah, I do. Like when you said over, I thought you meant like permanently. Like no, but I do agree. Like it would have been, a bit longer, the bear market. Like I think now, we have an even stronger case for Bitcoin and crypto in general, just because, all of the nations are fighting with each other. We have Russia, Ukraine, we have India at the moment.
Now the landscape is much better, of course.
Yeah. I mean, the world landscape is not better, but I mean for our bags, crypto, for crypto, it is good because no one trusts each other anymore. Like, I don't know if it's true, but I read recently that like China and Russia were actually like trading oil illegally or something, but through Bitcoin as well. And I wouldn't be surprised if there are way more nations that are doing that. And especially now with the US dollar taking some heavy hits. Warren Buffett also recently said like we want to diversify our currency, into other currencies as well. That I find like quite interesting, and makes me feel like we're in a good spot at the moment for crypto, even though that we had some serious hits. I do wonder though, because Warren Buffett was kind of anti-Trump, and now he said like we want to diversify into other currencies except the US dollar, which is kind of stabbing the US system in the back. And at that moment he says that he's going to retire. I wonder if it's like because of Trump that he's like, okay, I'm gonna like end it short here, or that he would actually like do another couple years more before retiring. Do you have any view on that?
I would say I recently read about this, and I would say it's definitely related to the change of administration to Trump, because like I'm not very familiar with the exact strategies and equities Berkshire is buying or selling, but I'm quite familiar with his interview about Trump like many years ago, and he was
wasn't that with Charlie?
It was maybe with Charlie.
I think it was with Charlie, because I recently saw it that he was like, Trump has a little bit of an ego issue. I think. Well,
no, he was literally like, this is like the last person that should be running an office.
Yeah, indeed. Yeah, but honestly, like how did you actually handle like the Trump volatility? Because that was totally unexpected.
I wouldn't say it was that unexpected, because like he was speaking about tariffs for a long time.
Yeah, but I didn't expect him to rush it that fast. I felt like it was kind of rushed, no?
I think it was from the political standpoint. It was the only way how he should approach it, because he has to clean up the mess before the congressional elections in the November 26th. Mm-hmm. So if he wants any negativity, or if he wants just this out of the bad things happen to the market or to his reputation or to anything, he wants it to happen as early as possible. So later, he can basically enter the elections
and say like, hey, I'm actually doing really great. Look at the stock market, etc.
Yeah, we recovered, and like these non-believers, they were wrong. Now
okay,
they're like all-time highs.
You make a very good point. Like I was always just thinking like, oh, he's just using it to create chaos and distortion, and like see who would be the first mover, who would come to him first. I mean, we have that of course, but I
like
think
the timing when the bad things should happen to the market, it's literally as early as possible.
Yeah, you're actually totally right. I don't know why it's so simple that I didn't think of this. Like I was probably overcomplicating it. No, you make that makes a lot of sense. Like, what is your view at the moment on the US? Because now it's becoming a little bit more unreliable. Like I'm even thinking like diversifying like my USD into other currencies. Do you have any view on that, or are you planning to do anything?
I think diversifying to other currencies could make sense, because like the dollar will be weakened eventually, but that's just the FX point of view. In terms of the markets, I think they're basically cleaning up the mess, and I think we will see great recovery before the November 26th.
Yeah, just because of the elections again.
Yeah, so for me right now, when I'm looking outside crypto, because crypto, it's nice, we have like strategies there, but I'm looking at other markets as well now, and I think it will be quite in this regime where everything is volatile and nothing is sure, and nobody trusts nobody in terms of like global politics and economics. I think it's quite a good time to look back into equities. And when I was exploring like which markets I would like to enter, I was most fascinated by a Russian market right now.
What's your view on the Russian market then?
So the thing is, it's very depressed at this point in time, and it's depressed because of sanctions and because of Russian position like during the last many years, and because of the war, and all these depressing factors, they will unwind at some point in time, and I feel that it could be better catalysts than crypto has lined up. So like if I look at what can happen, like what positive things can happen to crypto and what positive things can happen to the Russian market, I just see more catalysts and more volatility in the Russian market. The problem is it's very difficult to enter there because you need either a Russian passport or you need like a specialized company for it. It's quite difficult, and difficulty of entry even increases like the amount of capital that is sidelined from the market. So that's quite interesting opportunity that I'm exploring.
Yeah, I find it interesting that you're saying that because I was 2 days ago, I was talking with a guy who made some good money on Russian real estate, and he told me that he was buying a bunch of apartments in Russia, nothing fancy, just small apartments. Why? Because when Russia went to war, they basically knew like, okay, the money will be locked up inside of Russia and people have to buy houses, so they're going to invest in real estate. What makes you like say like, okay, I'm going to invest in equities, and is it because they are shut off from the global market and that you hope that the earnings are going to come back up, or do you have like another view on it?
Well, first of all, there's a lot of tailwinds that are within the Russian market. First of all, if only like certain portion of sanctions are removed, the equities may jump like 2x instantly. The other point is that there's very high rates for lending, like very high interest rates. If the rates drop, then suddenly real estate will cost more and equities will get huge capital inflows. So there's a lot of like depressing factors that are there. If they just remove one of them, we will see some interesting rallies.
So okay, to come back to crypto from the Russian markets, you were saying that you were not that excited about, well, you're more excited about Russian markets than actually crypto at the moment, but there is currently quite a lot being built. You have Monad, Mega Ethereum, and some other chains. There are a lot of new dApps that are being launched. Is there anything that you're looking at that you find quite exciting?
Well, from the sectoral point of view, there's a few sectors that I definitely find very exciting, and like there's AI and real-world assets, obviously, but within these, I'm not really sure how much of the growth there will be capturable by investing in crypto assets. Because real-world assets will be built on it, but I'm not really sure if there was like an opportunity to basically make a good investment. And AI is more like a broad subject, and maybe it may make more sense to invest in like equities related to that than to crypto. So with these sectors, I'm not yet quite sure, but they are definitely interesting to explore and watch. And what I'm most excited about, obviously, is the sector that I build in. So we are building in a privacy and interoperability sector. Why it's exciting to me is because essentially interoperability will, like the more chains you have in general, the more you need interoperability. And if the number of chains is actually growing exponential at this point in time, and you will need good solutions to bridge between all of them, especially if they have like different properties. So that's one thing, and the business model is quite easy. There's a fee for bridging. It's not like with RVA or with AI that you're not really sure what's the like value accrual for the project. So that's one direction, and the other direction is privacy. It's like the KYC system and all these factors are also like worsening year over year. So if we look back to 2020, 2021, you still had some non-KYC exchanges, and there was nothing like KYC on chain. And now it's like more and more dominant theme that projects employ this. So I think there's a pretty clear growth and demand for these two sectors.
Yeah, no, definitely. Like there are still a lot of like non-KYC exchanges out there. Like I know Max Global or Max C. They don't really do KYC. They don't give a damn, but they are also not a trustworthy exchange. Like if you search Maxi profit clawback, I don't know if you saw that back in the day, or like a couple months ago, maybe half a year. So what happened with Maxi is there were a couple perp traders that were making profit, and Maxi froze their assets and they took it away from them. Then they contacted support, and then they were like, well, there is like a thing that happened on our end, and we decided that you made profit, but we're gonna take it back, a profit clawback. That was quite interesting. I also know that a lot about the lower end exchanges, like I'm not gonna name them, but I've seen it with like some whales that they were interested in trading there, but they couldn't KYC because of regulation. And, the BD people just gave a big wink and said, if you do this and that, you can like bypass it, but it's not ideal. Now, about interoperability, like, for me, there are indeed way too many layer twos, and most of the time they're actually total bullshit. It's just to raise some VC money and sell. Like, don't you have like something about it? Like, okay, do you have like a selection process of like, okay, we're gonna only accept these chains because they're real, or are you just going to do whatever, or are you gonna allow them to integrate into your platform, but they have to pay like a fee if they're like scummy and low quality?
Well, essentially, we focus with Bridgeless. We focus on chains that are most demanded and that are not yet offered. For example, the simplest thing that for some reason almost nobody does is the bridging between Bitcoin blockchain and EVM blockchain. Takes like maybe 70% of all transfers, like globally within the interoperability space. Like 70% is Bitcoin and EVMs, and there's only Torchain. There's basically almost nobody else. There's like a couple small projects doing this as well, but it's nobody's focusing this road.
I don't think that when you're talking about this, because like Torchain, for example, when Bybit got hacked, Torchain got like a huge spike usage because we're laundering through there. Like, I'm not going to ask like what you're specifically doing to defend yourself against North Korea and Lazarus, etc., because otherwise you're going to give them the edge. But like how much of your effort do you spend on trying to avoid things like that? Because I can imagine that it's
I mean, if North Korea is using you to bridge assets, you already made it with the project.
Oh.
That's like like they will not use you before that. So essentially, like if we get to the point that we will be targeted by this, then we will be at quite different stage. We will be at like a Torchain stage at least, because even with them, like I mean, they were using them for a portion of the overall funds.
Well, it was like a lot was through Torchain, and there was also like this Russian exchange, but it was like really weird. It was like a pure HTML5. Like there was no CSS, no nothing. Like there was some website, but I forgot the name. But I mean, ZachXBT has covered it like quite extensively.
It's quite difficult subject. Like how do you, because let's say like it could be North Korean, maybe it's not North Korea.
Yeah.
And is a project like in power to establish who actually stole the funds? I mean, you're building a technology and somebody is using it, and you're not regulator, you're not like the police, you shouldn't have the power to decide who is actually using it.
All right, no, that makes total sense. I think those are all my questions. Do you have any for me?
Yeah, I'm quite curious because we spoke about FTX and about the volatility after the event. What was some of your like best and worst trades, or most interesting trades that you have made?
Most interesting trades that I have made. The thing is, there are some reasons that I cannot say like some of the ones that I've made and like the biggest losses and biggest wins. But one of my biggest missed opportunities was Shiba Inu. So back in the day, I got like gifted some amount of Shiba, and I sold it after, I don't know, like a year or something for, I don't know, like 10K, 20K,
you sold it 25K. To GCR probably.
Yeah, but the thing was like 6 months later or 9 months later or whatever, like I checked, I think it was literally on my birthday, 15th of May. I checked like Shiba Inu again and how much I actually had of the supply. I had like 0.5% or something, and at the top that would have been worth 130 million. Keep in mind, I gotten this for free. And I had a bunch of other friends that got like that amount of tokens for free. That one guy sold his stack for $700. So like I met him for the first time now in Dubai, and there were, I don't know, 3 or 5 others, I think, all lost their wallets. They all lost their private keys, and some of them were like Bulgarian, that were really struggling to make rent. So it was a hurtful moment for the group chat, so to say.
Crazy, yeah.
But I mean that group chat at that time didn't exist anymore because some people turned out to be scammers, and then basically
The thing with Shiba was that maybe if the supply wasn't such a large amount of supply wasn't lost or sold, there would not be a run because GCR and like other people would not scoop enough supply to push the price and push the narrative.
Of course, but like, how do you know if the funds are lost or not? Because you can of course check on chain and see if the wallet still has activity and stuff. But like, how you don't really know what percentage is like actually lost. Like you can probably do like some estimations. Like if you have 100 million of Shiba Inu, I don't know, or like $1 million worth of Shiba Inu in your wallet, and the other wallets that are connected only have like $50, and you can probably guess that it's lost.
Well, you can look how often it moves, but yeah, it's just estimates. It's not exact.
I mean, you always have those dormant addresses, or maybe like let's say that you had the Ledger app. Then the Shiba Inu in the beginning wasn't supported, to like show actually the price. That only came way later. Fun fact about that, so when FTX happened and I lost everything, I had like an old phone with the Ledger app installed with still like, with that I had my Shiba Inu on. And I opened my phone and I refreshed the app and I suddenly see that there was like, I don't know, it was like 23 million or something in there or whatever of Shiba Inu, and I was like, no way, like I actually didn't sell everything, like I didn't fuck up. And I refresh, I switch Wi-Fi, I go to 4G, everything works. I knew that the ledger was I didn't use it anymore, it was like somewhere in a safe, but there was no money on it. I was super excited. I check, like I was, a little bit worried, like, okay, the phone is a bit old and I didn't update the app yet. Let me quickly copy the address and like check on chain, and then I saw that I sold everything, and it was only a visual bug, but that was like a good 30 minutes of emotional roller coaster. What was like? Do you have any stories like that?
Not like that, because I was mostly like my coolest stories are probably from trades that I took on centralized exchanges. I had great success longing stablecoins, which not many people can say probably.
Longing stablecoins.
I basically created the bottom on USD at 2 cents.
On USD? Oh, on USD. Okay. Yeah. I was thinking you were maybe gonna do something like with the Silicon Valley Bank, for example, that you were like buying all of the USDC at 70 cents or something like that.
No. I bought some. I
did that some as well at the time.
But it wasn't the home run trade. It was just like buy some and eventually recover there, because during this event there were more attractive opportunities, probably in terms of like capital allocation, because everything was bleeding. But during the USD crash, it was like you assume that the value of a coin is a percentage of recovery. That like the value of a stable coin is like how many percent you have to recovery. And at the time when the whole Luna situation happened, there was definitely more than 2%. Yeah. On recovering at least some funds from the USD for USD holders. So it was a home run trade, and I allocated pretty heavily there, and I basically bought at 2 cents, created the bottom, and sold it all at 7 cents.
That's pretty damn good.
It's like 3.5x, and it was
like in 24 hours or something, right?
Yeah, it was very quick. Okay. That was like probably the most interesting, like huge long that I took in terms of like quick value trade.
I was expecting like Solana at $2 and I sold at 300 or something like that.
Oh no, I was buying Solana like at 6 and it went to 3 and I held through. So that was essentially like the Solana trade, but it's quite boring because a lot of people did this.
Yeah.
It's
nothing unique.
Yeah, it's nothing unique.
All right, I think that's everything then. Thank you for coming.
Okay, thank you for having me. It was awesome.
No problem, man. And till next time.
Till next time.